Sivaram, Investment Director at Enam Holdings, has just joined us. Sridhar, good morning. You're watching at a time when when there is a double thumbs up, perhaps from a TV channel point of view, 3 years anniversary for NDA and all-time highs, not just in India, but even NASDAQ and Wall Street indices. What is the sense? Are you getting a sense of any bit of frothiness, or do you think the good times have just begun?
No, when markets move like this, there will surely be some frothiness. Surely there's some frothiness in the mid-cap space, and one has to be careful on that. But broadly, if you ask me, I still remain very constructive and bullish on the market, because I do expect FY18 earnings to be very strong, as we discussed last time also. And the other thing is that this time the participation has been very poor. People are just not wanting to believe that this market will move up. Typically, those are signs when you know that the market will
Why would you say that? I thought we've got record mutual fund flows.
Yeah, so people are forced to put money, right? So if you ask, you speak to fund managers, they will tell you that, we are being forced. This is not what I want to buy.
Okay.
So it is not the perfect participation. This is being forced, where the money is coming in. And even FIs, if you see post-demon, a lot of them reduced their India overweight. And India was one of the best performing markets in the first 4-5 months. Now even China has overtaken India. So we are seeing strong performance even from emerging markets. So there was a disbelief even for emerging markets as we entered 2017. And now we are seeing very strong performance even for that. So when I put everything together, globally also, growth is expected to be better than what it was the previous year. Even for India, the macro is looking much better. And I can argue the macro was always looking good for India, but now even better. I mean, the way inflation has come down, I mean, nobody would have expected that we will see, inflation closer to
below 3.
I expected to go closer to 2 by July, and I completely disagree with RBI's forecast of 4% average. We discussed that before. So I sort of agree with Arvind Subramanian where he says there is some scope, but that's a separate debate altogether. In general, I see macro very good. I see earnings surprising for FY18. So I won't be surprised if this market continues to move up, and some correction is bound to happen, and I think that's very healthy.
Sridhar, hi, morning. It is hard to thump the table and call for a buy when the market has gone up so much, it's sitting at new highs, right? But you're doing that.
Yes.
So tell us, what would you buy at this point?
Clearly, as I discussed last time, it is the domestic cyclicals. That's the story. I mean, no point looking at things which are outside India right now. So no point looking at IT, pharma. Just look at stories which are domestic cyclicals. And the other favorite theme of ours is the transmission of interest rate that has happened. So look at companies which are delevering, who have a fairly good business model. And transmission across the board has happened at least for 100-150 basis points, which has happened over the last 3-4 months. So the full benefit of that will be seen in the current year. So I think there's a huge story waiting to be discovered there. These are not always the best managed companies. Some of them are changing. Some of them are being forced because the banks are pushing them. But there is opportunity available here. So I think the domestic cyclicals is the story. That's where we are looking and finding value right now.
Okay. Domestic cyclicals encompasses a lot of sectors, Sridhar. Can you narrow it down for us, where you still see an earnings upgrade opportunity, or perhaps, conversely on the, flip side, where valuations appear to be too rich and therefore you would avoid?
Yeah, so I would, start with, say, the entire construction sector. You look at the way order books are shaping up, not only on the roads. People are underestimating the orders that are coming from the urban transportation side. More than 2 trillion orders worth of orders have been already placed, and another 2 trillion waiting, which is, and I think about 15 odd cities are also getting into metro related stuff. So there's huge orders which are coming from state. We are so focused only on looking at the NHAI orders. We are missing out that our own city is seeing huge
metro rail
orders.
Oh yeah, we can see the
exactly.
entire city is
so those are
when
good
you see
signs.
that, you only know the traffic actually.
But those are good signs, because somebody is doing, and the good thing is that they've split the orders to 6 different companies. So work is not going to stop, because at least 5 of them or 4 of them will be, doing the work at the same time. The point I'm trying to make is that there is enough opportunity there. A lot of orders are flowing in there.
Yeah,
Railways is the other one. You want me to wait?
Railways is the question I was going to ask you. But let's do that just after a minute, because there is the opening bell. And, okay, it's a quiet start. expectedly so, because there is going to be a downward pull from Cipla, for instance, down 3.6%. We just played out Umang Vora's bite to you, and there was this refusal to give any guidance, resistance from giving guidance. That's been taken a little badly, but not too badly, actually. It's just 2.6 down now. IOC as well. I would have expected IOC to give us a different number, considering that crude actually has surprised positively from an Indian standpoint. Refining these in paint companies should be rejoicing, I thought. So anyway, we'll come to that in just a bit. Let me look at the gainers as well. Asian Paints, predictably, is the one that's doing well, with an expectation that, of our experts saying that crude could go even to 45. That was what Manisha found. Dr. Reddy's is getting a thumbs up for not getting any observations on its Srikakulam facility inspection. ITC up about 1.4%. Indiabulls Housing is 0.8, 0.9 higher, almost 1%. And among others, Tata Steel, Eicher Motors, Oro, Grasim, Infosys, Powergrid, all of them up about 0.5%. So that's the one that's pulling on the upside, and on the downside, as I told you, Cipla was the one that's still holding lower. Not a very big contributor from an index point of view, but so Sun Pharma. Sun Pharma, that evidence from those heritage companies turning state witnesses is perhaps preying on this stock. And then, of course, some of the banking stocks, SBI, HDFC Bank, are all not doing too well. So Bank Nifty is clearly dragging. After yesterday's superlative performance, 3% higher, Bank Nifty is definitely seeing a little bit of profit taking. Ashwini told us to expect that. So 1/3% lower on the Nifty Bank.
Okay, well, it's absolutely flat for the mid-cap index, just mirroring what the frontliners are doing. So the market breadth is good, though. That's something you would like, or 670 stocks on the advancing side. The theme that's playing out this morning, once again, is the classic crude-related play. Because of the fall in crude, you're seeing aviation stocks do well. So Jet Airways is on the upside. Some of these names like Philips, Carbon, etc. are also doing well this morning. In result reactions, Manappuram Finance is up almost about 4% odd. You have Heidelberg Cement that reported a good set of numbers. That's up in the green, up 3% odd. MEP Infra is up almost about 2% odd. Ashok Leyland gave some solid guidance of 10 to 15% of industry growth in FY18, and that stock is surging now as we speak. Concor is up in the green. Prism Cement, VA Tech, Wabag, Star Paper Mills, a couple of more stocks that have been, have done well this time in terms of earnings. Now, on the downside, Heritage Foods, Videocon, a 5th straight day of, downslide over there, has big problems of its own. NMDC also slightly lower than what the street was expecting. And let's take a look at what Britannia is doing, because those numbers, after a long time, have disappointed some part of the street. So Britannia is down almost about 1.5% odd. But largely, Rima, quiet start to the market.
Yes, pretty flat in the benchmark indices. Some more mid-caps. Dish TV is bounced back after the big drubbing that it got yesterday. So Dish TV is up close to about 5% odd. Concor, despite the decline in their top line, Concor has opened in the green, a gain of about 3% as we speak. Kiri Industries, again, an earnings reaction on the mid-cap end of trade. On the losing side, NMDC, Britannia, also a couple of stocks which have opened currently in the red. And keep an eye on F&O additions like HCC. So at least to start with, HCC is marginally higher in trade. But Sridhar, coming back to the point that you were making, you spoke about roads and the opportunity, not just from NHAI, but even from the state body.
Correct.
You were starting to talk about railways. Continue.
Yeah, so railways is the other place where a lot of work has happened. The dedicated freight corridor is well documented, though it is a separate organization on its own. So if I look at the entire railway basket, they were a bit slow to start, but a lot of work has happened. So we are seeing a lot of order flows even from there. And the other place for cyclicals is, of course, the commodity pack, not necessarily because of bullishness of commodity, but some of the balance sheets are getting repaired. Yes. So as a result, you're going to see significant earnings bump up. And cement is something that we are bullish on. Okay. So if I put a basket, there is enough opportunity. Even there are some select capital goods space where there is opportunity available, some in logistics, consumer discretionary and durables both have opportunities. So I think there's enough space available there.
In the cyclicals where the balance sheet
where you can play, which is the domestic consumption and the cyclical story, some related to infra, some related to the capex, which is slowly coming back. I cannot say that it's really come back in a bang, but at least we're seeing early signs.
Okay, 1 minute. I want to ask you about the entire finance space, but just get one technical advice from our expert. There would be a lot of people looking at the Nifty after yesterday's huge rally that we saw. Ashwini, is there a Nifty trade now, or you would wait for the dip to get a little sharper before you buy, and any other stock?
See, important things to watch are that June Nifty, June Bank Nifty, both are at discounts. So it's not like everybody is long in this market. And I would think that you are getting a bit of a decline early morning, and particularly because the futures are at a 15-point discount on the Nifty, as well as probably 150-point almost discount on the Bank Nifty. This is the time to go in and buy. I think as the market discovers that it's not falling, these shorts need to be covered, and probably the discount will narrow down. So this is about time to get long on the Nifty as well as the Bank Nifty. Plus, look at these aviation plays, Asian Paints, Jet Airways, etc. They are doing extremely well.
Okay. Well, thanks a lot, Ashwini, for taking us through those early trading strategies. Thank you, Rajat, as well, for joining us and taking us through pre-market. Sridhar, now to get back to financials. Are you confident enough to bet on the corporate-facing banks, especially state-owned corporate sector banks, and within the NBFC space? I mean, we've played the housing trade and played the housing trade and played the housing trade. Now what will you play?
So, on the PSU banks can't be a basket trade. So there are one or two, or some of the large ones are doing all the right things. The private sector, especially the corporate facing, I think it's time to relook at them because a lot of recognition has happened as far as the NPA is concerned. And a lot of resolution is also happening. I'm happy that government has taken some steps. It is debatable whether it's the right step to involve RBI or not. But the point is that decisions were not being taken. So now with some sort of an oversight committee, possibly some of these decisions will be taken, which is great for the banking system in general. And if we get little bit of push from the economy, which I'm hoping, so I think the financial pack is looking interesting.
NBFCs, you mean?
NBFCs, I'm still very cautious. I think the more ground level checks we do, we find that all sorts of unsecured lending, this LAP, all these are facing stress. Now, not everybody will see it. And MFIs, we've already seen, they're seeing huge stress.
Yes, today Manappuram's numbers, that part is clearly weak.
And whatever we've heard is that March was good, April has deteriorated again. So, I mean, these are not, published data, so these are basically anecdotal. So we'll know when the next quarter results come. So I'll be very careful as far as MFIs are concerned, as far as NBFCs are concerned, because a lot of them, because of the valuation push, have pushed the growth envelope. As a result, may have deteriorated the credit standards. Okay. Even on housing, pure housing is fine, but they don't make money out of that. So you have to lend to the developers and the LAP. So that's where the risk is lying. So one has to be very careful as far as that, because the banks, it's already pricing in the the trouble, whereas in the NBFC the trouble is not being priced in. Yeah, so the risk reward is heavily loaded against me when I look at the NBFC.
So certainly a contrarian view we are getting.
Okay, well, by the way, don't lose sight of the market. Look at the mid-cap space flying away now, up almost 0.6%. And the stock of the moment is Manappuram Finance. Almost a 7% uptick on that stock. Big volumes getting traded over there. So, well, whether you like it or not, these stocks are still moving up. Okay, Sridhar...
big Asian Paints.
I do like the gold finance because they're secured.
Yeah.
And they do have, so even if they have, some issues, they have gold. So you have a secured lending where you have a 4.5% ROA, 23% ROE. I'm saying the industry as such, so I don't want to name any particular company here. But I'm just saying that I'm okay with secured lending. I'm uncomfortable with unsecured subprime lending where people are just taken their eye off the risk.
You're in a good mood today. You should be naming some stocks. I mean, you virtually said the word, Manappuram, but it stopped you. We have a show called Get Rich, and in that show, we've sort of put hoardings across the city where we've told investors that if you had invested in Infosys in 1993, today, if you had bought 100 shares, today you would be able to buy a penthouse in, say, Nipinsi Road.
How I wish I had done
that.
Our fund had done it, by the way, because the
Morgan Stanley had done
because
it.
the issue was undersubscribed, and we were one of the
book
funds
runners.
who put.
So that's the past, right? You give us.
I didn't put it myself.
Okay, so now if you had to put money into one stock that could help you buy a penthouse, which
Yeah, but
one would
honestly,
it be?
no one knows when
He
you
has
actually
a penthouse in Bangalore. He doesn't need another one.
Okay, what about for us? What should we do?
So honestly, when you actually invest in any stock, at that point, no one knows that this is going to be, 5-bagger, 10-bagger. You just do your due diligence and do all your right things, keep your risk matrix, and then you invest based on certain assumptions. Sometimes your assumptions are so conservative, the actual numbers are much better. Sometimes it's not good. Yeah. So I think it's just a question of doing your homework right. And I don't think anybody can, pinpoint and say that this is going to be a 10-bagger or a multi-bagger. So we just try and do our homework right and hope things work out well.
Okay, just give us one number on this earnings growth. I know it's always easy to do it sectorally, but 20% is what the market is betting. 18% is almost consensus.
Yeah, so I think it will be 20, as I discussed last time also, that for the broader market, a 1% reduction in interest rate is 10% increase in earnings. Simple maths is that the total loan outstanding is 40 trillion and the total profit pool is only 4 trillion. So 1% reduction is $400 billion of extra profit. So that's a neat 10% for the broad market. Now, obviously, it will differ from, sector to sector. So in our view, the cyclicals, which we are bullish on, will have a higher impact on interest rate, just reduction of interest rate, than the 10% which I'm saying for the market, because they are the ones who have more debt. As a result, they will benefit more. So when you put this on a spreadsheet, you actually get outstanding numbers. So sometimes you can't believe the numbers.
And who knows, the RBI may be convinced by the same data that you are referring to.
So I'm actually not
redefine its neutral to say neutral, and that's what they said first. It can mean a cut, a hike, or a pause.
But I'm not
so you may still get some.
Just to say, I'm not bothered about what RBI does. It's a liquidity in the market which is determining. So RBI was cutting interest rates for a long time, and you know more because Raghuram Rajan was so uncomfortable with the fact that despite all the cuts, the transmission were not happening. Even as we speak, in the last 3 months, we've seen 3 months CP/CD rates come down by another 25 basis points because of the liquidity. So I'm really not bothered about what RBI does as long as they don't increase rates. If this liquidity continues, the transmission will continue to happen. And that's all we need for some of these corporates.